Welcome back again to this channel. This is the Captain Gala FX. Now, to welcome to today's episode. This is the second episode of the market structure, and today we are going to talk about the BOS, that is the break of structure and the change of a character. The last time we talked about the market structure, we said that the market always moves in three phases, and we talked about the first phase being the uptrend. The market might move in an uptrend, then the market might consolidate, that is the consolidation phase or sideways movement. Then we get a reversal and we move on the downtrend, which means we have a downtrend, uptrend move, sideways move, and also the downtrend move. That is basically the market structure. Now, through the market structure, we came across three different things, and we said that the market, wherever the market creates structure, we always say that the market always move on a zigzag, and that is something you have to know as a forex trader. The market will always move on a zigzag, and when the market is moving on a zigzag, the lows or the highs are always being broken to create a new high. Now we said that the time when the market is creating new highs, let me say the market is creating the new high. This high is swept out. Let me say it is on an uptrend. This high also is swept out, and the next high also is swept out. Let's say this is another high here is swept out. When these highs are being swept out or are being swept away, we always get what we call the BOS. That is the break of structure. Now, when we are getting the break of structure, that is the BOS, always shows the continuation of the trend, which means when you're trading the BOS, that is the break of structure, it always shows that the market is on a continuation move. Now, or a continuity market. Now, when the market is doing what we call the break of structure, which means the highs or the lows are being swept away to create a new high or a new low, depending on the movement, whether it is on a downtrend or it is on an uptrend. Now, when the market is creating new highs, when it is on an uptrend, it is creating what we call the break of structure. That is the BOS. Once a BOS is created, we always look for a test of the market so that we can always move. We can always continue with the same direction. Now, some people will always do this. One of the best strategies or one of the simplest strategies to trade is that some people will always trade the break of structure, which means they will always just wait for the market to break the last high, which means, let me say the market is on an uptrend, they just wait for the market to sweep away the last high, and then they wait for retest to target for the market to target the last high which was created, so that the market can sweep that again, wait for retest again, sweep the high which was created, something like that, which means that is gonna be a very, very good strategy. And if you check it out, it is one of the most profitable strategy, because what you need only to do is to check on the trend of the market, and the trend of the market will come and look into it. How do you check the trend of the market? Once you check the trend of the market, you follow suit, which means unaangalia or you check on whether this market is uptrending or downtrending. When it is uptrending, you just know very well that this market is a continuing market, which means you are only looking for the highs to be swept away and retested, so that we can always create what we call a new high, so that once the market retests the same zone, you always get into positions or create positions depending on the direction of the market. Now, there's something here. When you're looking at the BOS, that is the break of structure, that is BOS, the break of structure. When the market is sweeping a zone, that is the biggest problem a lot of people are having. When the market is sweeping a zone, let me say we are going on an uptrend. For a market to consider, for a break of structure to be considered, the break must be with a body. This candle closure must close the above the previous position or the above the previous zone with a body. If it closes with a wick, that is what we call a failed break, a failed BOS, or a fake out. And market always tend to do this. Some people might be thinking that the market has swept that zone away, and rather you will always realize that that zone was not, there was no break of structure, because now you are thinking that the market had already broken the structure. Now you are waiting for the retest. Kumbe, the market came and swept this low, retested, and now we are going down, which means you will have like the market came and swept this zone, but all this body was rejected into the same zone. Now, some people might be thinking that that is now the break of structure. Now, I'm just waiting for the retest so that I can take a trade. That is called a failed breakout and a fake out. And most beginner traders always fall for this. Don't fall for this, and this is one of the reasons why a lot of traders fail on this. Now let us check on the example of break of structures. Let us check on the examples of the break of genuine. I'm calling about the genuine break of structures. Genuine break of structures whereby the last low was never swept. Now, let us go on the 4-hour time frame where the candles, let us see. Now, we want to see this break of structures and everything. We want to see this break of structures and everything. Now, if you can see this, the market came and broke this structure. You can see there was a retest. You can see this candle came retested. Again, we had another break of structure here. This candle retested it. We had another break of structure here. Candle, this one came and retested it. We had also this low was swept, which means we had a break of structure here. This candle retested it. We also had another break of structure here. Now, when you are seeing this break of structure, the last low, now this, let us say this is a downtrend. Are you seeing this is a downtrend? Which means the market is forming lower low and lower high, lower low, lower high, which means for the market to continue and for you to call this is a continuation of a trend, the last high must not be swept. Wherever we get the break of structure, the last high which led to that break of structure, I think we are talking and you are understanding me. This is the reason why people get it wrong. Because you might think that you have a very, very perfect trade, but little did you know that that trade was never perfect. Now, wherever we get a break of structure, the market, make sure that the last high or the last low was never swept. Now, this is a continuation. This is lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. You can see this is also, there was a break of structure here. The market, this is the high. That high was never swept. You can see this market came to this zone and this market did not. You can see. I hope you are getting me. You are getting me very, very well. You can see this one, we had no, this market came and swept this with a wick. We had no break of structure here. Rather, this one was a failed break. That is why you can see the market actually reversed, started going up, and you can see the market came and tapped this high, this lower high, and gave us a very, very big supply and started trending down again. You can see again the market started again, break of structure, breaking another structure here. You can see that one was a break of structure, retest, we are going down. Another break of structure here, we are going down. And you can see the market now failed to break this zone. We came and broke this high. You can see this high was broken. The market came and tapped this demand. You can see. Now, if you go on the lower time frame, you will realize that this market, there was a failed break of structure around this particular zone. Once that failed, the market came and swept this high, which means this is a reversal of a trend, which means the market we are now not having a continuation of a trend, but rather we are having what we call a change of a character, which means you can see this high was swept away. Now, if you go to the lower time frame, let me say on 1 hour time frame, you can see we had a break of, this is a change of a character. The market came and tapped some demand around this particular zone. That is why you are seeing that we are about to go up. If you check on the lower time frame, it is when you will realize that we have another demand around this particular zone. Now, how are you going to trade this market? On the higher time frame, you already know that we have a break of structure, which means now you are on another trend. The market has now, you will wait for this market to tap that demand and now to go and give you that good buys. I hope now somebody is understanding something. We want to see this. You can see this low. Let me say this market did not mitigate that. On the lower time frame, let us check on the 30 minutes time frame. It is too clear. Yes, you can see it is too clear, which means that market is not coming basically to that zone, but rather this market, you can see that one was a very, very clear demand, which the market did not tap. So we need the market to come and tap this demand to go up. Simple as that. Because we already had a break of structure, which means now we have changed we already gotten a change of a character, which means we are now getting another, we are now getting the trend or change of the direction of that particular market. Now, let us check on the change of character. Change of character shows a reversal in the market, which means, let me say the market was uptrending. Simple as this. These are the simplest strategies to trade. Let me say the market was forming what we call higher highs, higher low. Higher highs, higher low. When the market comes and sweep the last low and closes with a body, get me right. This is where the inducements and manipulations come in for those people who are never serious with this trading thing. Now, whenever you see the last low was swept with a body, then the market closes with the body. You always check on the higher time frame, because on the lower time frame, the market might manipulate you. Always check on the 1 hour. If you want to check the change of a character or reversal of a trend or the break of structure, check on 1 hour time frame. 1 hour time frame and above. Check on 1 hour time frame and above. Only check, go to the lower time frame when you want to check on the sniper entries or the imbalances or the demand which was never mitigated on the lower time frame. I hope we are very, very clear about that. Don't check the break of structure on the time frame less than 1 hour. I hope that is well taken out. You can always comment on this video if you don't get anything, so that I will always repeat it on the next video. Now, let me say the market was forming higher highs and higher low, higher highs and higher lows, and the market comes and sweeps the last low with the body. Immediately the market sweeps the last low with the body and comes and retests the zone. We are now having what we call change of a character, which means there is a reversal of the trend. Now, what do we do? Now, if the market now will start forming what we call a lower low and a lower high. Now, immediately the last lower low will be swept again with the body, and we get, let me say the last low will be swept with the body, and we get a new low, which means now we are having what we call a break of a structure, a continuation of this. We only have change of a character once in a trend, which means immediately this market sweeps this low with the body, we have a change of a character. When the next low is swept, now we have what we call a break of a structure, a continuation of the trend. And when you are targeting your profit, always target to the next key level. A key level might be supply, a demand. If the market hits the nearest supply or demand, always take your profit to wait for the market to break that supply or demand to continue with the trade. Simple as that. You are going to lose. You are going to you are going to improve your win rate even with over 50 or 70% win rate. That is guaranteed. As long as you are always keen on the key level, you are targeting your profits and stop losses. Always make sure that they are very tight, which means they are either below a key level or above a key level with few pips below or above the key level zone. And when you are targeting your profit, always target the next key level. When the market is uptrending, target the next supply. When the market is downtrending, target the next demand, because you don't know whether the market is going to create a new high on that given demand, or the market is going to create a new high on that given supply, or the market is going to create a new high on that given, a new low on that given demand. This is the best strategy which is going to help you. Now, let us check on the change of a character. Change of a character, first you check on the trend of the market. Now, let us look at this. 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 Now, change of a character, this is it. This is 4-hour time frame. You can see this market has been downtrending. When immediately the market downtrended up to this particular zone, our last lower high was around this particular zone. Immediately the market comes and swept away this lower high with a body, which means we had what we call change of a character, which means that is CHOCH, change of a character. Let me write it. Immediately you saw this, you should not continue selling, because we had already have a what we call change of a character. Now, when there is a change of a character, the market, what you now need to do is to check on the imbalances on all the demand zones which the market did not take out. Now, for now, this market, we had a change of a character here. Now, the market, what we want to see the market do, we want to see this market come back to this zone after that change of a character, to come back to that demand, take out that demand, and now give us that give buys. Very simple, very nice, and make sure the market will always break that structure or the change of that character with a body. Immediately you see with a wick, that is what we call a fake breakout and a fake change of a character, fake breakout and everything. That is where a lot of traders or retail traders are induced by the market. Take keen of that. This is the Captain Ngala FX. Kindly join our free Telegram community using the link below. For a good broker, I'm going to check on the description box. Click on that link, create account with the best broker in town, that is XM. Create an account, join my free Telegram community, and also you can DM me for account management, copy trading, everything, so that we can get the best and the best from us. This is the Captain Ngala FX. See you next time. Bye bye. Adios.